I'm going to start my contribution with a point of reference to work done by the FCA in the UK and the Bank of England, a survey in relation to the use of AI in financial services. That survey highlighted the benefits of AI, and it highlighted particularly the high potential in the context of AML, fraud and KYC. However, with that, what the survey also identified, it identified data protection and privacy as the greatest regulatory constraint to actually maximize the potential of AI, which, if you think about it, feeds into the notion that data protection is a barrier, it's an obstacle, something that I regularly, as a regulator, come across. In addition, the report also identified the top perceived risks. Again, it made reference to data protection, privacy, and then data security, data quality, and so on, which is actually also related to data protection. So here you see the importance that data protection, or rather the data protection plays a central role in where AI is heading in the context of financial services. I'm just using this as an example. There will be many others. Now, with that, I would just like to show you just this short clip.
Relatively easily to back off just that amount that you need to do to make sure that everything is okay. Here he is, and he's now. I cannot believe it. It's a tyre. It's the left rear tyre of Damon Hill. There's Prost going through to win almost certainly the German Grand Prix.
So why do I show you this clip? It's because I tend to use Formula One as an analogy when it comes to data protection and innovation. In the context of Formula One, when someone talks about brakes, they will understandably think about brakes as something that's intended to slow the car down. In the same way that tire management and pit stops will also make the car stop and therefore slow the car down. But actually, a good braking system is fundamental for speed and will actually make the car go much faster. Equally, it will make the car go further because it will prevent you from crashing in the same way that good tire management will do. So in this context, something that is perceived as something that will slow down the car is actually vital for you to go faster, further, and prevent you from crashing. Data protection is effectively the same, and this is why I like to use Formula One as an analogy. There's another example, I'm just going to skip it. So it's not data protection versus innovation, it's data protection and innovation. And in this context, if you look at the communications from the European Commission at the outset of the data protection reform, which led to the GDPR, they highlighted obviously the importance of the framework to protect individuals, but also the importance of the framework to stimulate economic growth and foster innovation. That is also a primary objective of data protection, but we rarely talk about it. And it's important to remind ourselves of that. Now, just to highlight this point, moving away from what the European Commission says, what we say as regulators, this is a stakeholder in the financial services or finance context. The Bank of International Settlements, which is effectively a forum of central banks, released a paper on central bank digital currencies, which is a field that's undergoing innovation. And that stakeholder identifies privacy as a fundamental user requirement for this innovation to be successful. And it points to surveys done by the European Central Bank, which highlights privacy as the top requirement by respondents. Similar exercise by the Bank of England, the same. This is not regulators saying this. These are key players in finance also highlighting the importance of privacy for innovation. Now, if I come back to the slide I started with, and we've talked about AI and principles and so on, so I'm going to move quickly through the slide, but in a nutshell, there are some notes there in relation to various principles on the GDPR, but just pointing to transparency. Transparency and explainability has been touched upon by the OECD, ICO, the Alan Turing Institute, and so on. So there's material already out there which can help you navigate this complexity. Now, the key points that I want to highlight, again, accountability has been mentioned. Think of this as when you're working through a university or school exam. You're very often told, make sure that you can actually show you're working, even if you get the result is wrong, because that will get you marks. Accountability is the same. It will mitigate the risks, even if you get it wrong. And the other key point I would highlight is prioritize. Identify the high risk processing activities and use cases and focus on those and work your way down. If you don't go through everything, which I think in the majority of cases most organizations won't, at least you covered the high risk, and if the regulator identifies something, it's on a low risk element. Also, it's important, I think, to think about these subjects as when it comes to data, we're not talking about data, we're talking about people. For example, and the real world impact. When there's a breach, there can be annoyances, it can cause fear, and that happens, for example, when there's employee snooping on bank accounts and so on. That's the effect. It can actually result to costs to individuals. For example, let's imagine a bank is down, an individual can't make payments, money goes out of the account, it can actually lead to late payment fees, overdraft fees, and it can actually affect your credit rating if payments haven't been made on time. So this can have a direct cost on individual. And the next point is we all know that fraud is in the increase, cybercrime, cyber fraud is in the increase. That can also affect individuals if you have poor controls in place. Moving on from those type of costs, harm, physical or mental. Surveys show that about 70% of individuals that suffer from fraud victimization, see a decline in their mental health, leading to anxiety, depression, and so on. There's a professor in the UK who actually says that he's aware of lots of cases where someone has actually killed themselves as a result of fraud victimization. Okay, I've just pulled these statements from quick searches online, but I'm sure there's more. Key point is think that there's more to it than data. It's about individuals, and that's your responsibility. Now, in terms of moving forward, and I'm glad to actually have heard a lot about this throughout the conference. Regulators provide guidance, but actually every opportunity that you have to actually engage with regulators, my suggestion would be use it. Whether it's via think tanks or associations, try and approach the regulator collectively on any issues that your sectors have, because through that, regulators will understand, learn about your challenges, and hopefully be able to respond to those. We do that locally in the form of workshops. We've done it for the Betting and Gaming Association, we've done it for the Bankers Association. We identify issues in relation to disclosures of personal data to law enforcement. So we prepare the guidance notes addressing those issues. And we did the same with the discussion on blockchain, again, because of issues raised in the financial services context. Beyond that, or within the domestic sphere, we also have an MOU with the financial services regulator. We also led the creation of a Gibraltar Regulators Forum, where we also meet the financial services regulator and the financial intelligence unit, gambling commissioner, legal services regulator, and so on. Now, on top of that, we work as a team. So we're collaborating with each other all the time. And here's an example of a meeting that we had last year involving Dubai, Malta, UK, Ireland, Bermuda, Jersey, Guernsey, the Isle of Man, with 2 international experts on AML and data sharing for the purposes of AML. And this is actually a project that we're working on in the background. And finally, internationally, again, we're also exploring the possibility of creating a regulatory sandbox jointly. This will be something new, something that is not necessarily widely done, because we recognize that there's actually studies showing that there's a correlation between jurisdictions that have sandboxes and investment in fintech and capital coming to the jurisdiction. And it also provides for legal certainty. And this is something that's even been reported on by the World Economic Forum.